Hey there, and welcome to this pre-market live stream. We're joined by Winston, who looks a little deflated because he thought his portfolio was all up and it was going to go straight up like a rocket ship. But this morning, I'm afraid to tell you, the market is dipping once again. And I want you to understand what that means. Does that still mean we get the short squeeze? Does it mean the opposite? So I want to walk you through the following here. And let me share my screen with you so you can see what we've got going on here, what I got in store for you here today, so to speak. We were up, now we're down. Why? Wall Street has actually already explained the morning dip to their loyal fund managers, and I want to share that with you because I think you deserve to get the same information that the big boys get on Wall Street. And I'll also show you why investors have never been as lucky as they are right now. Like, this is some good news. We want to touch upon the NVIDIA effect because that's important, and show you ultimately why Wall Street is kind of blind, maybe deaf and dumb at the same too, and therefore what the massive opportunities that we got ahead ourselves, what the computers will do. Yeah, it's computers. Soon we'll be like, what did the robots do today? They'll be like news. 19,000 robots, met today somewhere and demonstrated for more power or something. I'll give you the one indicator that I'm watching to decide when I'm buying individual stocks. At the moment, I'm buying the index, and I've told you that, but when I'm going to start buying individual stocks again, I'll tell you when. And then we're going to end up with a big, beautiful, shiny, bouncy Q&A here. Does that sound like a plan to you? That sounds like a plan to you, right? Write money in the chat. Let's be greedy here today, like good old 80s bankers. And Winston looks a little glum back there because he was washed today, bathed, I should say. He's not a big fan of water if it's for the purpose of watering. Anyway, he managed to roll in some pig shit straight afterwards, and we're going hiking tomorrow. I mean, I'm undoubtedly going to find some other smelly things to roll in. So I think he'll be fine. So good morning. Mark wrote, Annie, no money there. Money. Wrote Brent and Nicholas and Shane and Scott and Tom and Jip and Monica and Paul and Colin and Matt and Andre. And Honey is also good. Yes, Honey is also fine if that's what you're after. So shall we get cracking? I think we should probably get cracking. God, that some of the people are writing in German. The horror. Let's have a look at this. What the heck just happened? And if you prefer a prettier visual, let me show you. This is the pre-market, right? You need to put on your tinted glasses here today. So what the heck happened there? Well, things went really well yesterday, right? And I'm not going to walk you through like an hour of Jerome Powell because I know you actually want to enjoy your life. But, we had a big, beautiful rally after Jerome said pretty much all the same things. And I'll tell you a couple of the key points in just a second here because it's important to understand those. And then the market closed. So the market closed here. And then usually overnight, everyone sort of goes to sleep, a little bit like that. And then somebody woke up at 4 a.m. this morning. I'm not implying that they were on some sort of substance that make them wake up early, but, just a thought that occurred to me. 4 a.m., somebody goes, oh my God, I don't think it makes any sense, let's sell. And they did that pretty harshly. And all the gains were wiped out. And we're back to exactly where we started, pre-Jerome Powell telling us everything will be fine, children. So what happened here? Well, first of all, this wasn't a surprise because I could tell you that by the end of yesterday. But this might have had something to do with it. And I tweet silly things sometimes. So if you guys are on X, find me over there, Felix Prehn. There are a lot of fake accounts. So look for the one with the blue tick. Otherwise, you are going to get sold, I don't know, puppies, and you have to pay for them in Bitcoin or some sort of scheme and scam like that. But yeah, it would be a shame if somebody tweeted something about tariffs, right? That's kind of the thought there. And of course, the almighty Trump did. But I said to you I didn't think it was a surprise. How do I know that? Well, I have access to dark pool threads. Do you know that the vast majority of stocks bought and sold and options bought and sold do not happen on the stock exchange? So what you're seeing there in that squiggly line and those little price points, minute by minute that you're looking at doesn't tell you what the big boys do. Winston is one of those. Winston has his own dark pool. Don't you, Winston? He's very well connected, that dog back there. So we have access to the data. We pay an arm and a leg for it, so you don't have to. And you can get access to that, by the way, if you want to, if you go to TradeVision, Felix Prehn.com/TradeVision. It's the software that we built. And at the end of yesterday, which is 16 hours ago right now, because the market's about to open. And what am I looking at? I'm looking at large trades here, right? There's some pretty large trades, right? These are pretty big positions. These are all options positions, so they're massive. They're massive because they control like 100 shares each for just one contract. So they're really, really huge. And look, they're all bearish, right? They're all bearish. And this is just the S&P. But then if you go down a little bit, okay, become SPY, and there were also individual positions. We can have a look at that later if you want. So pretty bloody bearish. Now, back to our little story here. JP Morgan warned early this morning, they get up early. They said yesterday's rally may not be indicative of near-term direction as the Fed's forecast shifted to support the stagflation narrative. And Powell reintroduced transitory inflation. So what's stagflation? Stagflation is, the first part is you go hunting for a stag. No, I'm kidding. Stagnation, right? So stagnation of the economy. So kind of like 0% growth, basically. And then the second part is inflation. And Powell did say tariffs do not cause long-term inflation. That inflation is transitory. This, of course, is the same Muppet who printed $4 trillion of money and then told us that that inflation would also be transitory. Well, in the long term, you are transitory, I'm transitory. Even Winston is sadly transitory. Although I'm not sure he's really fully aware of that yet. Which is a good thing. He's a happy chap. So what does it mean? Well, they're basically saying, well, we might get a worsening economy, right? If they keep slashing government expenditure, putting up the tariffs, and if they don't cut taxes till like later, which is a little bit the playbook right now, and then we're going to get inflation from the tariffs for the short term. They won't matter that much, but in the short term, we get them. So we might actually slide into stagflation. And maybe that's why somebody hit the sell button at 4 a.m. this morning. Maybe somebody woke up and had that brilliant idea, right? Audio is still crackling from time to time. I have a sound engineer coming on Monday. We will apparently put up all sorts of conundrum machines and fix this problem once and for all. I think it's interference. That's what I think it is, honestly. I think it's just too many wires and Wi-Fi and things in here. But if it crackled slightly for you, I apologize. I shall do my best to uncrackle myself, much like we're trying to uncrackle the market. What's the gift to you here? I said to you, you're very lucky. You're insanely lucky. You're sitting at a moment down here where, what is this? This is maximum bearishness. The world's about to end. This up here is maximum bullishness. And we're right here down here. The last time we were down here was, 2022. Yeah. Before that, it was 2008 global financial crisis. So maybe people got a bit emotional of late. I think that seems to be possible. People seem to disagree with each other on politics and then just set things on fire. That seems to be the way to handle it. I disagree with you. I'm going to burn down every car in the country. Like, okay, all right. Taking your meds lately? Apparently not. So why is that a glorious opportunity? Because have you looked back at a stock chart? Do you think in hindsight it would have been nice to buy the market bottom in 2009 or in 2022? Right? Would have been, right? You would have made a lot of money. So why does it not feel good to press the buy button? Because we're not programmed that way. We really are not programmed that way. And I will do my utmost to reprogram you, because I was literally having a conversation this morning and saying, I'm so happy the market's down. I really do mean that. Because I can buy, and I have been buying not inconsequential amounts at like a 9% discount to what I would have bought anyway. So I'm like, this is freaking brilliant. I love it. So I want to get you to that place where you understand these patterns and you see patterns rather than the red in your portfolio and the fear, because you have a bit of a longer vision. And if you want to get that reprogramming from Winston and I, then go and watch our reprogramming masterclass, because we teach you there the rules that'll tell you what to do in these moments. And they're not rules that we came up with. They're rules that I learned from my mentors, who learned it from their mentors, who learned it from their mentors. And it goes back to, Jesus probably. Was Jesus a stock trader? So yeah, that's how we learn. We learn from the people who've done this before professionally and been taught by people. So if you want to get access to that, links down below, felixprehn.org/get free. And you too can wake up and go, things just happened. The market's down 9%. Amazing, right? Ben, I'm glad I make you chuckle occasionally. So now we have our special green friend, Jensen, the GPU man Juan. And he spoke today, he was the NVIDIA chap. And he said, overall, we will procure over the course of the next 4 years, probably $500 billion worth. That's 500 billion. It just sounds more exciting when you use the word trillion, worth of electronics in total. I think we can easily see ourselves manufacturing several hundred billion of it here in the US. So they're going to do a lot of manufacturing in the US because $500 billion, 500 billion, right? So 500 billion globally. And a lot of that is, of course, Asian supply chain. And if they're going to do several hundred billion, that would at least be 200 to 300 billion suddenly in the United States of America. And Taiwan Semiconductor has plants in the US, Foxconn has plants in the US, and so on, and they're all expanding them rapidly. So you could say, if that's true, that would be quite a big win for Team USA. And if you want to get political about it, Team Trump, because it wouldn't have happened otherwise. So now the car burning lot's going to kick off again in the chat, right? What city do you live in? Well, it's a good question. Winston, what city do we live in? At present, we tend to winter in Hong Kong, which is where we are right now, because it's subtropical. And we're going to go hiking tomorrow, and it's glorious here. It's like blue sky and 20 degrees Celsius, which is, I don't know what, 70 Fahrenheit or something like that. It's just perfect, crisp blue, absolutely lovely. So we're enjoying our winter here. And then when it gets a little warmer in Europe, we're going to head in that direction for a little while, but not for that long. We only like to visit, really. So what if I told you that Wall Street is really led by the blind, who lead the blind, and that you can still make money in it? This is Goldman Sachs, right? Sort of smartest investment bank out there. The people who work at Goldman Sachs have a bit of a chip on their shoulder. They think they're very special. They probably are a bit special. They say we've left unchanged our forecast for 2 cuts this year, one in June and one in December, and one more in 2026. Pretty bearish. But the timing of the cuts is highly uncertain. And this is a funny bit, I think, if you enjoy language. We would characterize our forecast at the moment as more of an expected value of a range of possible outcomes, as opposed to a model outcome that we feel strongly about than it normally is. So basically saying, we haven't got a fucking clue. But I had to write an analyst document and send it to people, so I picked June and December and one more in 2026 for rate cuts. But I really got no idea. And I don't know why I'm being paid hundreds of thousands of dollars to write this drivel, but for some reason, you lot are reading it, the press is picking it up, so I'm not going to fire myself, right? That's basically what Wall Street's saying. So yeah, they haven't got any freaking clue. It's pretty vague. It's pretty much vaguer than the Fed. The Fed, do you see the Fed dot plot? So the Fed puts out this dot plot, and actually I haven't got a screenshot of it on me because I don't think it really matters that much. But, they're basically saying interest rates are going to be, 5%, 4%, 3%, 2%, 1%, that sort of thing. And then they put their votes in, and they're basically like, yeah, the 2 here and 2 there and 2 here and a few here and a few here and a few there. They're basically all over the freaking place. Probably friends with the guy at Goldman Sachs. So yes, nobody knows which way it's going to go. And therefore, all you can deal with is how's the market taking it? That's what I always say to people. Fundamentals and awareness of the economy and all this, it's all very nice. But the real way to make money, and there are only 2 ways to make money in the market. And there's one to make average returns, and there's one to make potentially fantastic returns. This is the market crash since 1870. The big ones, the the panic, the Sherman Act, the World War I influenza, the Cold War, Cuban Missile Crisis, Watergate, Vietnam, Black Monday, COVID, all that kind of good stuff, the Great Depression, World War II. And every single time, if you'd bought the dip, you would have made a lot of money. If you'd had lived a really long life, a $1 invested here would today be worth $31,000. So long term, you could just buy the index. By the way, this doesn't work if you buy stocks because companies go out of business. This doesn't work. So if you think, well, if I just buy Tesla and hold it forever, I'll always make money, you probably won't. So this works if you buy the index. And over the last 20 years, the index has made 11.6% per year. That's pretty good. You compound that, you'll do pretty well. Plenty of money for dog snacks, right, Winston? He wants one of those flying things that can take him to the beach whenever he wants. That's what he asked for. So what's the other approach? You learn the patterns and you buy at the better moments and you sell at the better moments. Simple as that, really. So when the market does this and then goes up and then does that and then goes down, well, what do? Well, it really isn't that hard. You buy approximately here and you sell approximately there. And then in the meantime, you make lots and lots of money. And then you can enjoy your life and you go for hikes for all of Friday like we're doing tomorrow morning. So if you want to learn that, well, you need to find a trader on Wall Street, kidnap him, tie him up in your basement, and threaten him. That would be one approach. I mean, that would probably work. Alternatively, you can just watch my free masterclass, which is down below, felixprehn.org/get free. A little bit less fun, but it won't get you locked up. By the way, the guys who are setting Teslas on fire, you go to jail for that for about 5 to 20 years. Do you think they thought that through? Probably not. If they make it terrorism, which I don't know if they can really get away with that, but if they make it terrorism, then it's 20 years without parole, which is pretty freaking harsh for just for reading mainstream media, really. So what's the good news here? And the good news, well, somebody said Toyota. Toyota stock's about to break out. Is it? I actually have a Toyota. There we go. My secret revealed. Felix has a Toyota. You can ask me questions about that. There's a Q&A, so you can ask me about why I have a Toyota. So what are we expecting? We're expecting that computers, the lovely fluffy computers, are going to buy $45 billion of the S&P in the next month if the market goes up. If the market goes flat, they do nothing. If the market goes down, they basically do nothing. So we just have to go up a little bit, just a little bit, and then oof, we're going to get all that money coming in. Now, and Toyota, this is all you guys are going to take away from this, right? This guy, I don't know who he is. He's got a dog and he's got a Toyota. That's all I learned. Didn't learn anything else. So you want to take a note of this because this is useful. This is important information. The second thing is pension funds are expected to buy, according to Goldman Sachs, another, I think it's 34 billion by the end of March. So that's pretty good. So now you already have 70, 80 billion being bought. So you might see a nice little stabilization that. So it's reliable? No, not because it's reliable. Nothing to do with that. Nothing to do with that. Why do I drive a Toyota? Let me know in the chat and you can come up with it. This is the one and the only indicator that I would look at. The ticker symbol is VIX. It stands for the fear index. And you basically want to be below 20 means life is good. Above 20, it means panic and your hair stands up. That's sort of financial markets explained for you in a nutshell. We also make a lot of money out of the VIX, by the way. It's something that I trade quite actively, but it's a little bit more complicated. Easy parking? No, nothing to do with that. Nothing to do with parking. It's the best make. I don't know if that's true. Nothing to do with that either. Winston likes it. he likes pretty much all cars, to be honest with you, because they tend to take him to a beach or a mountain. So he's quite partial to cars. When I first got him from a little shelter, he hated cars. He was scared of them. But now he associates cars, there he is back there, tough life, with fun. So cars are good. Planes, he's still a bit confused about. He's like, why, what? Why are we in the air? Why is this bouncing? So Winston gets it hairy, or he certainly does. Many millionaires drive used Toyotas. It's true. I've actually got a used Toyota as well. There we go. So it's question time, my friends, and then we'll look at some of your favorite stocks as well, as the market opens in 8 minutes. So Q&A time, and I'll tell you why I have a Toyota, which is a bit of a knobbish reason, really. I have a driver, and it's a 7-seater, and they make these very nice big vans. So they're kind of built for that. It's quite a popular thing in Asia, in particularly. So you'll see lots of them for that very reason. So they're comfortable if you get driven around. Driving it isn't the greatest thing in the world, but it's decent. I do drive it sometimes. A dog off-road vehicle? No, nothing like that. But yeah, it's a cheap car. Like it's how much was that thing? I'd say it was like 15,000 US, something like that. So it also means that if, my driver or housekeeper or somebody like dings it and scratches it, which they inevitably do, I don't care. Winston leaves it furry, don't care, just don't care. It's just a vehicle I don't care about. And it's a really nice thing, I think, not to care about material things like that. I grew up with the opposite. My family was always very obsessed with like keeping everything perfect. I'm like, I hate it. So here we go. Pre-market, unless you're invested in, I don't know what, Pepsi. Everything is looking down a little. Not terrible, but looking down a little. I drive a Toyota truck because it's Back to the Future. Oh, that's funny. When will Trade Vision get a heat map? It's coming. It's coming very shortly. We're working on it. And why are pension funds buying by algo funds doing the opposite? Aren't pension funds governed by algo funds? No, Nathan. Pension funds are usually governed by their governance rules. So if you take a pension fund and say, so this is your, red pen is a bit menacing, isn't it? So your typical pension fund, and these are big funds, right? Say it's 60-40 or something like that. So 6% stocks, 40% bonds, just let's just say randomly. Okay. Obviously, they can be slightly different. They can be a bit more sophisticated, but let's just say that is their allocation. 60-40, that's how they have to own. So what's just happened? Well, bond values have done what last couple of months? They've gone up. Stock prices have gone down. What does that mean? It means at present they own, say, 45% bonds and 55% stocks. So what do they have to do to fix that problem? They buy stocks and they sell bonds. So that's the rebalancing. They do it every quarter, and what they do is basically look at how the market's done in the last 3 months, and you know what they're going to do. It's quite a useful piece of data to have. What would you buy today? I'd buy the index until we are sort of out of the woods here. And the way I see this being out of the woods, the VIX is now at the volatility. The fear is at 20.7. Yesterday, we were a little bit below 20. So I'm hopeful that, it might go down a little bit lower. And it might. Nothing happens. Moves in a straight line. We're definitely out of the present, out of the woods of like the sort of scary zone. But we're still not completely out of the woods, which is what we'll be in like in 16, 17 range, which is where we make a lot of money on these trades as well. But so yeah, until then, I'm just buying the index because it's cheap, it's on sale, and it's 10% cheaper than it was. So I like it, but I have a long-term horizon, and I do that every week. So I'm quite happy to buy more of that. Now, do I see individual stocks as opportunities? Say, like a Palantir or something like that. Do I see the opportunity? Well, yes and no. I mean, I don't see it like violently moving up at present because we're kind of going sideways with one of those consolidation phases. There is uncertainty in the market, and the market hates uncertainty. And what's giving us uncertainty? Well, think about it. the president is like the definition of uncertainty, right? There are very few people who will invoke as much uncertainty, and he seems to enjoy it. We don't know what economic policy is going to look like. We don't know what tax rates will be like in a year. We don't know what the tariffs will be. That comes out on the 2nd of April. What does he call it? The Freedom Day or something like that. So that could be massive. It could be nothing. You know, we never really know. I mean, we had the Epstein files. That was nothing. The JFK files was like 80,000 pages of nothing. So maybe this will be nothing. Who knows? But I always err on the side of caution. So at the moment, for me, the cautious approach is to nibble on the index. Typically, that's been a good thing. What price would you buy the S&P? Whatever price it is today. It doesn't really matter. Like, just in the long run, the S&P goes up. Like, you know, that chart I showed you earlier on, over the last 150 years, it's gone up. The last 20 years, it's gone up 11.6% on average. And even you can buy it below the, if you can buy it below the 200-day moving average line here, which is that one here. And you can see that in Trade Vision. You can toggle that on. We look at these moving average lines. So that brown one there, whenever you are below it, it's pretty rare. Last time we were there was in October 2023. That was a good buy point, right? You would have bought at 400 something. So you'd be up 40% or something. You'd be pretty happy with yourself. You have a nice new mic set up, Fox. Well, sort of. You can see the high tech here, right? Apparently, we're going to get a sound guy in on Monday. So they're gonna sort me out. I was told share the screen. Okay, love is in the air. You don't see the screen. Okay. I see what you're talking about here. There we go. So get a Trade Vision trial, and then you can also see these glorious things. This is 2023. The dip on the S&P. We're trading at about $410, $410, and then on the SPY, right now we're trading at $560. So you would have made, $150 on that. That's pretty good, right? It's 40% up. So do we look at a 6-month graph or 2 years for moving averages? Doesn't matter. You just want to look at a 1-day chart. Just make sure your time, each candle is 1 day. The length of the chart is really irrelevant. It doesn't change the moving averages. It's just about that. Some of our Germans are on there. Herzchen fürs Einsteckstuch. That's sort of, you must be somewhere in the south, right, with that kind of language. Sound is a little bit better. Thanks. Yeah, I messed around with it quite a lot today. I talked to LLMs about it, and it's amazing. You can take screenshots of all your sound settings and say, these are all my settings. This is my problem. What do you suggest? And it actually tells you. Pretty good outcome. I still think we can do it better, so we got a guy to come in to make it better. But yeah, if you want to, guys, get our indicators, get our analysis for all the major stocks, get access to dark pool data live, all that good stuff. It's all in Trade Vision. There's a free trial, so just check it out. If you like it, you like it. If you don't, let me know, and we keep making it better. How much is below the 200 moving day average? Well, I mean, you can't be there for longer. I mean, most of 2022 we were there. But still, that was for the S&P. That was a good thing. If you just bought like once a week or once a month or something, your average would have been, say, this, right? So you would have bought on average just over $400. And we're trading at 567 right now. So that was a good thing. But you need a long-term horizon for this stuff. If your horizon is like next Tuesday because you need the money to pay for something, then don't invest. Like, it just doesn't work for that shorter time period. Is there a smart money, dumb money indicator for individual stocks? You mean the percentage that we own, that they own, that kind of thing? Sure. Institutional percentages are fairly easy to look up. We could do that. What sound would you change? David, are you a sound engineer? I didn't really change anything, which is the frustrating thing sometimes. I just didn't change anything at all, but sometimes it could be a cable. It could be, actually, we have new Wi-Fi. That could be it. It could be that get interference. Sound is a fickle thing I've learned over the years. So I usually get in somebody who's a sound engineer, and then they do it and then tell me what not to touch, and then I will not touch it. what you go all in with your savings at this point is Japan. So I would that's a good question, and obviously don't just do what I do, because it depends very much on what you're doing. I said generally speaking, you want to have 1 to 3 months of your expenses in cash. The exact amount depends on how good your cash flow is. If you only have one income stream, like only one job, you're going to want to have a little bit more than if you have like 5 income streams or something. I have quite a few income streams from different businesses, so I buy stocks every Monday, and I like that. It smooths out my sort of system, right? Because I'm just buying at whatever the price is for the index, and then for stocks, I just follow aggressively our system, our rules, which makes us a heck of a lot more money than the index. And that's, of course, the goal. So why do I even bother buying the index? It makes my family feel safer. That's basically it. And that's a good thing. Like, it helps you sleep at night, then brilliant. Viewers lower fees. Yeah, there's a SPY is a good thing to trade. It's not a good thing to own long term. What are we looking at yesterday? SPIG or something, one of those. There are ETFs for the S&P that have 0.02% fees, 0.02%. That's what you want to be holding for the long run, because that's very, very, very low. I'm drowning in income, can't keep up with buying. Well, it's a good place to be, isn't it? That's a very good place to be. Do I own dividend stocks? Fox? No. I mean, you can't avoid the bloody things, but I don't like dividends. The maths doesn't add up. I think people have been. I understand the simplicity of it and the attractiveness, therefore, but the maths doesn't make any sense. Especially as I'm not an American. You might have not have noticed. Shock horror. What? I thought you were American. I got to pay 30% withholding tax on dividends, U.S. dividend income. Like, they just keep it. Nothing you can do about it, just keep it. So I'm not particularly keen on that. But even for most people, there is taxable consequences. It is much, much better if the company buys back their own shares or reinvests the money. So I'm not a fan of dividends. Is that what I should buy? Look, you decide like what you want to buy. I can't tell you what to do. I don't give you financial advice. But if you want to buy the S&P, then yes, you want to buy the ETF with the lowest fees, and that's one of the 2. I think there are 2 that have such low fees. So, but really, what I would do is I'd make a plan. I'd make a real like map of where do I want to get to. What's my target? What is the market going to do for me if it keeps going up at the average rate that it's been going up the last 20 years, which is 11.6%. And that'll motivate you to keep investing every week and every month, because that's the important part. It's to do it always do it, especially when the market's down like it is right now. How do you use the measuring tool in trade vision, says Klaus? That's a nice question, my friend. Let's just say you want to look at Tesla or something, and you're thinking about, do I buy here? And then you're thinking, okay, what was the last crash? Let me get rid of some of these squiggly lines here. What was the last time we like dipped hard? And you're like, let's have a look. So here, we dipped 64% down in 2023. Okay, so how big is the current dip? And then you can have a look at that, and that's 54%. It's actually a little bit less than that dip there, right? So it's that sort of stuff where it helps, where it gives you a little bit of more stuff for visuals, and it might also help you to set up a stop loss if you send percentage or trailing stops or stuff like that. So I think it's just a useful little feature. Endless motivation. Thanks, my friend. Why did you just buy the index when it starts trending up above the 50? Yeah, I think you can do that if you were looking for like more aggressive shorter term returns. Well, what I'm saying is there's 2 ways of managing your money. One is just to blindly buy the index, especially when it's on sale. And I think there are good opportunities to create some pretty easy wealth. Or if you want to be a little bit more, if you want to be individual stocks, I wouldn't just blindly buy individual stocks. I would look for what the chart's telling me. And at the moment, say for Tesla, it's saying it's going down. It's a falling knife, right? So at the moment, I'm not buying Tesla. Tosa is talking about options. The problem with options, my friend, is, and I love options, I'm an options trader, is that when the market drops, options get very expensive. So you don't want to be buying options near the bottom in a crash because you're overpaying. And you can tell that by, we have a little indicator up here that says IV%, IV%. And it goes from 0 to 100. 100 is expensive, 89 is expensive. So you want to be selling options in that moment, but you need to really understand options to do that, to take advantage of that. You can't make it work, Klaus. There's a little thing up here. Right? We're gonna make this a little bit more visual. We're working on a rework of this, but up there right now, it's a little measure tool. Can you see that up there? It's a bit small. We're gonna make this a little bit less gray and hidden. That's in process. The problem is spying QQQ also falling knives. Yeah, but that's a difference that the index can't go to zero because it's 500 companies. If some of them fail, new companies go into it. So the index in the long run always goes up. Individual stocks do not. Right? There are individual stocks that have just gone down for 20, 30 years, and then they go bankrupt. The index doesn't do that. And that's why in moments like this, buying the index is, if you have a long enough time horizon, is a good thing to do. Buying stocks is a risky thing, right? Which is why I'm not doing it. Leonardo, your time hour speech really helped me take money management seriously. I appreciate that, Leonardo. That's why I do this. It's nice to hear that it lands. Zim, should we have a look at that? I actually haven't looked at that today yet. Zim, which is a bit of a contrarian play there. It's down 4.6% today. So some people are now going to be screaming murder. So yeah, I haven't bought it yet, right? I like the setup. I mean, I like the company fundamentally, but I don't like the chart. And that's why I don't buy stocks when chart looks like this. And if you watch that video and you watch it to the end, you heard me say that. So what's the problem here? Well, who knows our rules? Who knows our rules? I mean, some of you guys are, because some of you are my students. But that here is the 150-day moving average line, right? So we're below that. That's bad. That yellow line there is the 50-day moving average line. And we're below that. That's bad. So that's pretty much all we need to know at this point. It's just not a positive setup right now. So we need a breakout. We need to move beyond these lines. And when we do that, I'll be very interested to buy it. Until then, kind of wait. QQQ took 17 years to recover to break even of 2000. It's very true, my friend. But if you've been buying during that period, because that assumes that you bought once and then again for 17 years, right? If you were buying during that period, you came out of it a very, very rich man because you've been buying it at very, very low levels for an extended period of time. It was the greatest wealth creation opportunity we've seen in the stock market in probably 100 years. So it really is just a question of, do you keep buying, right? That's how it works. If you're just buying the index, you just need to keep buying and it'll make an average return. If you buy on one day only and then wait, you may do well, you may not. So that's the way index investing works. It's not the greatest strategy in the world. It's very simple, which is why people do it. Toyota is smaller in size, not the one I've got. You get 7 people into that and probably half a dozen golden retrievers. What happened to the auto resize button? It's still there, isn't it? I mean, this little auto scale button there, it's still there, but you can also just double click here as well for you trade vision users out there. So, alrighty, any other questions, my friends? No one's aggressively challenging my decision to drive a Toyota. Don't worry, I'm not going to set your car on fire. How long to hold to get the dividends? So dividends, they're priced in, right? So if you buy the stock today and tomorrow pays dividends, you have paid for the dividend already. So it's not to get this magical windfall that you haven't paid for. So it isn't like free money. Anna Aruna, you drive a Toyota Corolla. Yes, and if it gets dinged, I don't care. Exactly. And that's sometimes quite a nice thing, isn't it? Box, thanks for putting that out there. As a true German, where is your BMW or Mercedes? Yeah, I think they're okay, but I think they kind of missed the boat on technology. Honestly, they just have. I think they have a very loyal customer base, and obviously they're good cars. But I just don't think they are. I don't think they're competing with the Asian cars or the Teslas. I think they're just light years behind in terms of tech. That's just my opinion. There we go. Pissed off all of Germany there. Well done, me. One of the Lexus, because that's just a more expensive Toyota, isn't it? Yes, you can do that. It's the same thing, but it's just more expensive. I don't really go very far. I just get, I sit in the back and I get driven somewhere and I jump out. Like, as long as it's comfortable, which it is, kind of works for me. And think about all the money that it saves you that you can invest, right? Think about the compounding. Have you tried the self-driving Tesla? I have not. No, I've not had the privilege. I was driving a Tesla in Monaco quite a lot, and very nice car. I like it a lot. Not like super luxe, but gets you from A to B very, very nicely and pretty comfortable. So yeah, I thought quite impressive. I thought. Takes you from point A to B exactly. Winston the chauffeur, yes, and he's hoping that he's going to get retired by FSD at some point. Yeah, it's a funny thing, isn't it? Like, probably never hire another driver again, right? It's just a job that'll disappear. It's just a job that'll completely disappear. And is that a good thing? Is it a bad thing? It's just change. In the short term, it's going to feel for the drivers, but in the long term, it'll just free up a heck of a lot of opportunity. And how much time is lost driving, right? Like you drive to work, it's not that enjoyable. You stick in traffic. Well, what if you could swivel around, have a nap, start working, take a meeting or whatever, right? Like that would be a lot better. So I think it's going to be a huge thing. All right. Holden, yeah, cheap cars, invest the rest. Absolutely on that one. That makes a lot of sense. How do you feel about Tesla switching from electric to hydrogen fuel? What's that rumor? I've not seen that. Indices are not stocks all of a sudden. I love my stocks, but in this particular market, it is very, very volatile. So the index in the long run will go up. It's very simple. Stocks, individual stocks, not necessarily. So our rules haven't changed one little bit. You can get access to them right here. I buy things when they break out. And at the moment, there is very, very, very little breaking out. We have a breakout indicator in here in Trade Vision, right? Is that giving us any breakouts? I haven't seen anything for a couple of days. Yesterday, one. Like we scanned like, I don't know, 6,000 stocks or something, one. And what's this? IHS Holding Limited. I don't know what it is. Never heard of it in my life. That actually looks pretty good. and that's a really, really nice, long, consolidation phase there. So that might actually be a really good one. I don't know. I'd have to look into it. Never heard of this company, which doesn't stop me from necessarily buying it. But yeah, there's just very, very, very few opportunities. And the problem, of course, is that if one thing breaks out, but the industry gets clobbered by just bad sentiment or the market overall because Trump tweets something about higher tariffs, then no matter how amazing your earnings are, like these earnings look out of this world good, 1,700% higher than expected, then even that can get beaten down, right? So, but from a chart point of view, this is actually textbook, right? I'm not telling you to buy it, but yes, this is textbook. And the textbook is, if you learn it, and please learn it properly, the masterclass will help you with that. Links down below. You get a consolidation phase, right? In this case, it's been a pretty long one. It's been going on for like over a year, and then you get a breakout. And when you get a breakout, what you want is extraordinarily large volume. You want to break through the 50-day moving average line. It's doing all the right things. It's gapped up. It's given us nice big volume the day after, and it's doing well even on days like today. So it looks very good. I just don't know what the heck they do. I'd have to look into that a little bit. But you find very, very few. And as Yannick says, you need the market tailwinds. We don't trade against the market. We don't want to make our life difficult. We want to make our life easy. And there are moments when it's easy to make money. And the hardest thing to do as an investor is to sit on your hands. So why then not just keep the cash? Because inflation will eat it away. And when the S&P is down 10%, historically, that's always been a very good time to buy. So my odds there are pretty good. Rheinmetall is breaking out. Yeah, all the German and European defense stocks have, because the Germans are rearming. Just reassuring, isn't it? I say that as a German. I'm not sure Germans should have a lot of guns and arms, really. I'm not sure they have the mental fortitude for that sort of thing. History certainly hasn't been very kind to us on that front. So we just tend to elect, well, you could call them strong leaders or nutters, one or the other. Lumen, someone's bringing it up. Is that what you're bringing up? Lumen, or was it Luminar? This is not good. Can you buy ARK? Yeah, of course you can buy ARK. ARK should recover when rates come down, right? But at the moment, would you buy ARK? It's a falling knife, right? It's a falling knife. So we called an exit up here at $60, which is probably a pretty good call. It had a nice rally up, actually. It turned bullish here. The real breakout was this. And then you should have exited probably here by drawing a trend line. That was probably the place to go. And then it wobbled. And then after the wobble, it started to collapse on really, really big volume. So I wouldn't touch it. What drawing tool do you use? These are just browser tools, honestly. This is called Page Marker, and this magnifier. I don't know what that's called. Just Google like magnifying glass for a Chrome browser, and you'll find them. But you probably only need them if you either are short of sight or you're presenting to people. Following ARK's research is really helpful. Yes, you mean to avoid things? No, I mean, in fairness, they do put out some good stuff. I just think their timing is, I don't understand their timing. I have no idea what the basis is of their decisions when they're buying. They seem to always be, I think they try to be contrarian, but I'm not sure they're very good at it. Yeah, very odd. I don't really get them. The Germans, indeed. Insurance goes through the roof. You're being terrorized. Yeah. That's a very sad state of affairs, isn't it? That people think that that's the best way to make an argument. Like I still don't really know, what is the argument. What is the argument against Doge, which gets rid of fraud and wasted money, your money if you're an American taxpayer? I just don't really understand it. Like, no one's really coming out and saying, "Oh, I really don't think you should cancel that program because that helps, underprivileged children in this area and has a tremendous impact, and here are the 1,000 people who've benefited from it." I didn't see those headlines. Maybe I'm reading the wrong thing. In which case, yeah, good point. Maybe that should get funded. But it seems to be mostly stuff that's just like, complete nonsense. LGBTQ plus for, lizards in Guatemala, or teaching training or something, like really, really random shit, which just seems to be like just corruption, really. So very odd. People are so angry about that. Unless, of course, it's the people who used to receive those funds. I can understand why they're angry, but I don't really understand why people support it. But, there we go. Changes, they just slash and break stuff. Elazar, you've done some research on IHS. What do they do? Communication infrastructure. Interesting. Okay, don't know anything about that, but yeah, good. Julian, they're hurting everyone. Okay, be specific. Be specific. Like, not everyone isn't specific. Tell me one group of people they're hurting and why it's a bad idea, or how are they hurting, and you'll have my utmost support. But just give us a fact, right? Give us some data, and I think that way you'll convince people. I think if you just say they're breaking everything, it's terrible, it's horrible, oh my god, then it's not really an argument. And I think that's a little bit the problem at the moment, is that the politics has sort of just turned to we hate people. And it's like, okay, what are you actually for? What is it that you want to achieve, right? So what do I want to achieve? Like, I do this because I enjoy it, but I get, okay, personally, selfishly, I get a lot of satisfaction out of all the lovely messages I get every day from everybody in the community. It's very satisfying. And I get a kick out of helping people. And I think you get real satisfaction from making an impact. And I think it's much, much better. And you know, once you've done jobs and corporate things and businesses and everything, and you kind of realize, okay, that's all very well, but it doesn't really give you real satisfaction. To me, this gives me real satisfaction. So that's why I do it and I enjoy it. So you got to ask yourself, like, well, what is it you want to achieve, right? Like, I want to make 1 million people financially free. I think that'd be super cool. I feel really good about it. We have a party. So, you know, what's the outcome there, right? Veterans Affairs, Social Security, traffic controllers. Yeah, but I so far haven't seen them slash handouts to veterans or to people who receive Social Security, right? Is that what you're saying? I mean, I think they're just looking at waste. I could be wrong on that, but like, give me a specific where like somebody who should be receiving something isn't receiving it. And I think make that case and literally just write to Elon and X and you'll probably read it. So there we go. Julian says they say they've saved trillions. They can only verify they've cut 8 billion of contracts. Okay. So you're just saying they're exaggerating, right? But they've still saved you $8 billion of taxpayer money. It's your money. So why is that a huge problem? You're just saying they're exaggerating. Okay. I think we can live with that. They probably are, right? Most politicians exaggerate. I don't know what the real number is. I have no idea. That's not such a terrible thing, right? Is that worth like setting cars on fire for? Like, you exaggerated something. I mean, every politician exaggerates, right? That's kind of the name of the game, isn't it? Anyway, let's move away from the politics. It isn't really going to get us anywhere. I'm just saying, like, they've cut veteran staff, I think, for understaffed agencies, making it harder for state debt limit for vets to get medical care. Okay, if that's true, I mean, I don't care about the staffing because I think most government agencies are overstaffed. That's just my opinion. But if it's harder for veterans to get medical care, I think that would be a scandal. I think that should be improved. I think the question is just like, can you do that with less people? Can you provide the same government service with less people? I would probably say yes. But I'm not saying that they're doing the right thing on that front. But I think if you know, Julian, if you make that point to people and say, hey, look, this is wrong, I think this is a problem, I think you get a lot of support for it because most people want to support veterans, right? Like, I have a whole free financial education program for veterans because I highly respect them. So just be less generalist and be more specific. And I think your course will have a lot more support. So there we are. Now, final glance at our favorite stock. Winston is sleeping sweetly there in the background. You see him. Do you think we get a Winston cam? I'm thinking about getting a Winston cam. I think it'd be quite sweet, a bit of a closer up one. So less politics, and you know, I actually enjoy politics, but I think the joy used to be that we could disagree on stuff and then come to a better understanding. And I think that seems to be sort of lost. Like the art of the conversation is lost. There's an interview did you see that by Alex Karp? The Nasdaq's down a little bit here. He said that he has conversations with Peter Thiel, you know, the ex-PayPal crew there, and one of the greatest venture capitalists out there. And they violently disagree because Karp's a lefty, believe it or not, and Peter Thiel is a you know, real conservative. So it's kind of fun. And they're friends and they debate and they know that they're not going to agree on everything, and that's completely cool. I think it'd be nice to get back to that place. Palantir's a little bit green here. What about some of our rate-sensitive stocks like SoFi? Slightly in the green, 0.4%. What about the big boys? Nvidia? Nope, not NVD, NVDA. Winston Cam, yeah. I don't know any vets that are anti-Trump. Can't comment on that, to be honest with you. Nvidia looking up, actually, looking up a little bit here. What about the big tech stocks like Amazon? Okay, big seven are moving green again. What about Tesla? Burned to the ground as 0.5% down. So Tesla not really coming off the ground here. The VA has been broken. Yeah, I know. I think the support for veterans in pretty much every country in the world is a freaking scandal. They deserve a lot better. Isn't Peter Thiel the owner of Palantir? One off. Yeah, one off. Most people's sense of common sense. Yeah, I also discovered that you get sort of the one lone loon, and then he really goes off on one. And I always feel sorry for people who go a little bit loony and off on you and like comments and stuff, because obviously they're very frustrated and they're very angry about something in their life, and that's why they're like ranting at you. So it isn't really about you. It's just kind of sad to see when people are like burning stuff down. I think it's just kind of a sad state of affairs, and also very sad for them because they're going to go to jail, right? Like their life's ruined. It's like so pointless. You get so upset about politics that you're like, yeah, I'm going to ruin my life over this. Like they're going to go to jail for 5 years, right? Tesla's got 9 cameras. Like it's just, you're getting caught from all angles. A lot of the time they're coming out of cars, so you can see their license plate. It's like, I mean, come on, guys. It's like, it's just not a good idea. So there we go. What are the best German companies? I don't really know. I don't own any German stocks. You might say SAP, that used to be pretty good. Bayer, if you have no moral compass rather, because they poison the world. They bought Monsanto, right? Evil Knievel. Yeah, I'm not really sure, to be honest with you. A lot of industrials in Germany, right? I mean, right now probably the best play has been, and maybe still is defense, as in weapons manufacturers. I'm not really a huge fan of that. I'm not really a big fan of industrial companies, low margins, lots of steel. Basically, if it involves lots of steel, I'm not there. Like planes, trains, like all that kind of stuff. I'm not into it. It's got low margins. It needs lots of capital. It's just not a great business. If you can invest in a software company or something, they make 80% margins, whereas those guys make very little. So not really a huge fan of that. Scott says, Felix and coaches have helped to enlighten me in my approach to the market. Scott, very, very happy to hear that, and we'll continue to do that every single day. So come and join Scott and learn more about our rules at felixrenzelog/get-free if you guys haven't already. And Winston and I, who's sleeping peacefully back there, say, okay, some of the Germans are in here. Dr. Joseph, do you work for Siemens? Yeah, it's a great company. But you got deleted, did you? Yeah, you got banned, my friend. Sorry about that. I don't know if it's a great company to invest in. That's guess what I'm saying. So on that note, I wish you all the best.